Listen to me ramble. And welcome everybody for another installment of the show Will Go On Business Survival Series webinar. We are on episode 11 of 12. Next week will be the last scheduled one. We haven't made plans for what we're going to do next, but hey, I appreciate everybody's encouragement and ideas, and please continue to send those in. And we're pivoting quickly here, whatever we need to pivot, and we've got to make a pivot here soon on how we're going to continue to communicate about this and help you guys work on your businesses and get ready for the next normal as it may be. So thank you for all those ideas. I am, of course, still your host, Tom Stimson. Here's all the places you can find me. I'd like to see more of you on Facebook, especially over at the AV Matters Facebook group. Come join us. YouTube videos, we're getting a lot more YouTube subscribers, so I'm probably going to open up some more videos. I have hundreds and hundreds of videos that aren't necessarily available on the Stimson Group YouTube page. I'm going to have to make them public to do that, so I'm going to take some time, review some videos, release some things for you. I've been very prolific over the years, recording webinar series and video series, and just short 3-minute discussion things that are useful to you. So I'll put more of those out there. Q&A, as always, in the Q&A box. Chat in the chat box. I won't refer to the chat much during the webinar because I can't read it as easily as I can the Q&A box. But I will keep up with the Q&A and ask questions about anything at all. It doesn't necessarily have to be on the topic. At the end of after the content, we have plenty of time for Q&A. I'll answer whatever questions you have about your business or what your business will be or whatever it is you have a question about. So thanks for being here very much. Reminder, Avixa is supporting this series, has helped make this possible. During a very difficult time, they're doing everything they can to support live events. You can learn more about what they're doing at this page here. The Business Survival Exchange will be back this week. It was on hiatus last week for the holiday weekend here in the States. So please register for that and join, and feel free to discuss what you've heard today and get some feedback and input, share your ideas. We're building a much bigger community than we've ever had before. I'm very excited about that. If there's any upside at all to everything we've been going through, is that more of us are talking to one another and sharing information and being a community, which I think is fantastic. I've got 2 coaching groups filled. I'm right now on a wait list for a 3rd owners coaching group or general managers coaching group. So if you're still interested in a group experience, and let me tell you, it's been really exciting, very dynamic conversations with these folks. I'm happy to form a 3rd group, but right now I'm just taking names on a wait list. So email me. You can go visit the webpage and learn more about it, but shoot me an email and let me know that you're interested. We'll have a conversation. We'll do a quick video call, and I'll put you on that wait list. Of course, we're recording this. You can watch the recordings here. We do have new visitors. We are getting new folks every week. And I'm still doing 15-minute checkup calls. So if you haven't had one yet, and many of you haven't, but I do still talk to quite a few people every week, but there's a lot more of you out there. Let me help you, better understand your business, what you can do about it. I had a great conversation with a gentleman from Scotland last week, telling me about his business, and there were so many things that he was missing in terms of opportunities that he was going to see as they start to reopen in the north. So he was very excited about his potential. I'm going to talk to him about raising his prices because I looked at his price list. There's a lot of things we can do in a 15-minute call. And if it gets you going again, then it was well worth the time, yours and mine. So I'm happy to continue to do that. AV Matters podcast. Wallace, if you're listening, we've got to record another one here real quick. We get caught up on a couple of these. We do about every 2 weeks. We'll do a podcast recording, answer questions about the webinars that we've had. The Facebook group I mentioned earlier, please come visit us. Great place for discussion and sharing information. Now, on to this week's content. The word of the week is wait. And it's not wait in the sense that stop what you're doing and do nothing. It's not that passive you know, ignore what's going on around you. Wait. Wait is the state that we're trying to get to. I want to get you to the point where you are healthy enough and prepared enough to wait and weather out the storm that we are in. You know, we're still battening down the hatches, to use a nautical term here, and um, people I'm talking to, I mean, all over the world are experiencing the same thing. And some of you are hearing nothing about new business. You're not hearing anything from your clients. You can't get them to engage with you because your marketplace isn't re-engaging yet. Well, that's why you're waiting. There are things that you can do while you're waiting. I'm not saying be inactive. You can continue to be proactive, but you want to get to the point where you're comfortable when things don't happen immediately. One of the things that keeps coming up in conversations I'm having is people are telling me all the things that they've done and the marketing pivots they've made, and the new studio they've got set up and all the products they've researched, and they can't get anybody to engage. The customers aren't talking to them. Nobody's flocking to them. Well, you have to let some of these things take their time. There's only so much you can do. We can't create work, right? We can't create work that our customers want to do, but we can put it in our customers' minds that when there is work that they need done, that we will be involved, and that's our goal. So if we've done everything we can do, we can relax a little bit, take a breather, okay? Everything's in place. Have that moment where you could take a day off. I don't know about you. I haven't had a lot of days off in the past 8 weeks, 9 weeks. We need some days off to help us recover and get our brains back into the right spot. So, chat question. I've already mentioned this in the pre-show. For those of you who got here early, post something on there. Are you writing proposals for events right now? Tell us about it. When are they? That's an indicator. We're all trying to figure out what our pipelines look like, and if you're writing a lot of proposals for August and September, that would be helpful information for us. If they're all for 2021, that's helpful information as well. How big are these jobs? Are they streaming jobs? Are they hybrid jobs? Are they new business, or are they jobs that you've already had on the books that are retooling? Is there something that's changed? You don't have to answer all of these questions, but give us a nugget of what's going on in their world. And if you're not hearing anything, then say that as well. Okay, we can be a little bit vulnerable here. Hey, it's just a chat line, but that's also information, because other people need to know that they are not alone, that their phone isn't ringing, the email's not lighting up with stuff. Their markets may not be ready yet, and we need to hear that so that we can be a little bit more comfortable with this waiting thing, which, as an old show guy, hurry up and wait is like, always so frustrating. So much of what you do on shows is rush, 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 get ready, rehearse, 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 open up the doors, and then you wait. And then a speaker comes on stage and you wait. There's a break and you wait. There's so much waiting that goes on in our world. It's hard to attune to that in the business world, where there's always something else to do. So some recaps from last week. We talked about marketing, right? And the big takeaway was, the bigger the pivot you're trying to make with the business, the bigger the marketing response or marketing support needs to be for that. Adding a new product, no big deal. Making a slight shift, yeah, we still need to communicate. But if you're going from dry hire rentals to full service streaming, that's a huge pivot, okay? And you need to do all the things, because you're a startup in every sense of the word, and you've got to do all the stuff that somebody does to get out there and create the credibility that you need to be successful in your pivot move. So not everybody is pivoting towards streaming. There are people who are working at other support services. There are folks who are waiting for the ballroom or the hybrid event to come back, and the old style of streaming, rather than the web-based Zoom streaming that so many clients are hooked on right now. And if you were directionless before this pandemic crisis started, then your marketing is starting with a brand deficit. So if you've been directionless and you're making a pivot, okay, it's going to take time for this to work. You're going to have patience. This is an investment, not just in money, but in time and patience in intellectual property, effort, trial and error testing, okay? But it will pay off. And you can compress the startup phase and get it down from years into months with a little bit of effort. So that's the big takeaway. We talked about the 4 buyer stages. You know, there's people who are unaware that you need to educate. There's people who are aware, who we present common problems to them to help them understand that there are solutions that you can help with. There's the curious buyer who wants to get deeper into the hidden issues behind the common problems. And then there's the engaged people who don't need to be marketed to, they need to get started. And how do you do that? So knowing that there's 4 buyer stages, you need to have marketing effort that speaks to a little bit to all of them. But most importantly, if you're trying to develop new business, you want to focus on the aware customer and the curious customer, because those are the people that you can make a lot of traction with if you're developing a new market or selling a new product. And we talked about where you're going to connect with these people and how you're going to do it. And here's the standard list. You know, you've got a website that you can update on, make the website messaging more relevant to the current buyer. You can shoot people emails, you know, drip stuff out to them, let them know about developments and things that are going on. Social media, all of this is designed to drive people back to your website where they can discover more about you on their own. And that's what good marketing will do for you. It will work for you while you're sleeping. So you need to, if you can get people to your website, right, then you can start wheedling away at them. But you need to get them to sign up for something. You need to get them on your mailing list so that you can talk to them through promotions and campaigns and newsletters. But that doesn't mean you have to bug them or be a pest, right? There's a way to talk to folks that fits your brand and your style and gives them the information that they need. And that's why we need to understand what phase they're in so that they will open up the things that are interesting to them and it will satisfy their need for knowledge. We still can talk on phone. We can still send personal emails. And then please, video calls, right? I'm sorry, some of you hate Zoom. It's palpable. I've been doing this, I've been doing video calls for a long, long time. And I will tell you that when I have one-on-one calls on a calendar invite, somebody books a call with me, my calls have been exclusively video call setups for years. A year ago, maybe 50% of you turned your camera on or called in from a computer instead of a phone using the phone bridge. The resistance to video calls in our industry is just mind-boggling. So break yourself of that habit, of whatever fears you have about doing this. If I can do it, you can do it. Start using video calls. I don't care if it's a 5-minute conversation. Use video whenever you can. Get comfortable with it because it's your future. And not using it says more about you than using it poorly. What do we offer when we talk to these people? Well, we talked about the phases of our recovery and our messaging in those phases. Now, the interesting thing is, a lot of you think you are in phase 3 because you've started doing some hybrid events or some streaming events, but that's not necessarily true. Many of you are just coming out of phase 1. Matter of fact, I'm talking to folks who are just getting to the point where they're telling their customers that they're available and they're open for business, or will be as soon as the governor says that they can go back to their offices. So many of you are really in phase 1, even though you've done a lot of the stuff that's going to help you in phase 2 and phase 3. In phase 2, when we're communicating to our customers, phase 1, we say we can help. Phase 2, we start sharing information about things that they should be thinking about. Hey, you're thinking about having your first meeting, or what to do about that meeting in October that you're not sure you're going to get to have. Here's what you should be thinking about. Here are the things that you should consider and how we can help. In phase 3, when we know that we're going to be able to have some form of in-person meetings, and the protocols for that are if not clearly understood, a lot better understood than they are right now, then you might start talking about things like how to leverage the advantages of hybrid. It's not a horrible thing to go from a meeting with 1,000 attendees to a meeting with 100 attendees if you can get the other 900 people into a streaming experience and make that compelling for them, which is where we can help. And that's what you start talking about as we enter in that third phase. And then the fourth phase is what you're going to be doing differently for a post-pandemic event where we're left with some remnant of maybe social distancing, temperature checks, certainly sanitation and sanitizing. We'll have to talk about that, but we're so far away from phase 4 yet, we don't even know what that conversation is going to be. So that was last week. And you can certainly go back and watch that if you hadn't. I thought it was a pretty good explanation of how to take on marketing in this environment. Now, this week, well, here we are. Many are in the United States. Many of you in your PPP period. You've got people back in the office. You're burning through that loan that's supposed to go for payroll. You're still wondering why you're doing that because you don't have enough work for people to do. I get all that. Could it have been done or should it have been done differently? Yeah, probably should have. We're not going to fix it. We're going to go from where we are and move forward. After 11 weeks of doing these webinars, I'm finally ready to start talking about what it is you need to do next time. Or more importantly, I'm going to tell you what not to do next time. I've been talking about what you should do for years. I mean, that's really my entire business. My marketing is all of what are the things that you should be doing. And I've gone back and looked at material that I created 5, even 10 years ago to see if there was a difference in what I was saying then and what I would say in the post-pandemic era. And honestly, there's not a tremendous amount of difference. There's some commas, there's some nuances to it, but the fact of the matter is, I've been saying things like, you need to outsource more. You need to reduce your overhead. You need to balance the number of people you have to the work that you're trying to do. You need to do less custom work if you're not getting paid for it. I mean, all of these things I've been saying for a long time, so there's not that much difference. So let me tell you some of the things that you don't want to do this time around. Remember, you got to do over, you got to do something differently. So the urgency for you right now to restore everything to normal is very powerful. You're finally back in the warehouse. I know some of you, I've talked to so many people who have new offices that they haven't even finished moving into yet. They just happened, the timing couldn't have been worse for you. So you're trying to get everything back to normal and to whatever your new normal is going to be. And we've learned some disheartening lessons in this crisis. And one of those is that our businesses can't survive on their own in this kind of a crisis. There's something not sustainable. We are not recession proof, and we're certainly not pandemic proof. And we tend to build our businesses and run our business with the assumption that we'll grow. Of course we're going to grow. We plan on growing every year. We put another 10% in the budget or 20% in the budget every year. And you've had a really nice run. You've had some of the best years you've ever had. And then here we are. We've gotten into a habit of spending ahead of ourselves, okay? Or presume that you have work and you're eventually, if you buy the gear and you hire the people and you get the office space because you're anticipating work, what eventually happens is you'll collapse under the weight of growing expenses when the revenue doesn't actually keep up, or more importantly, when the gross profit doesn't keep up. So, but we do want to grow. Okay, if you're not growing, you're dying, right? We've all suffered a little death or a huge death over the past 3 months. You want to grow, you want to make money, and maybe you want a legacy. Your legacy could be, money to provide for your retirement. Maybe you want to be able to sell the business and do the next thing because you don't want to retire. You like building things. Or maybe you want to create a lasting business that your heirs or your employees will run for you and pay you a lovely emeritus salary. There's so many things that you can do as an exit strategy that's not selling your business. So owning a business is about choices and goals. If you have goals, you have a lot of choices how to get there. If you don't have goals, you're probably going to wander a little bit aimlessly because you have the choice of any goal you want, but your ability to reach that goal is dependent on your drive, your aptitude, and quite a bit of luck. So most of us need to increase the odds of getting good luck to help us along the way. But we have this pesky thing. Well, statistics is always pesky, right? But there's a distribution which is represented by a bell curve, and it's a little bit of a curse. Okay, so there's a leading edge and a lagging edge of everything. You know, the whole thing about a bell curve is that, you know, the middle 67%, the median of any bell curve is where most of us fall, 67% of us fall. And then some of us are on the leading edge or the trailing edge of that bell curve, which are down on the very rare side of things. And this applies to most everything we do. This is very similar to the 80-20 rule, or any other thing where you find that, you know, 80% of what you do comes from 20% of your customers, right? 80-20 rule. So here's a situation where you've been on somewhere in the median. Well, let me advance this. You've been somewhere in the middle of this curve, maybe not dead center, but comfortably in that middle 2/3. Maybe that's where you feel safe. Maybe that's as far as you could get. Some of it, we don't necessarily want to be on the leading or lagging edges of this thing. We want to be in our comfort zone. And so you've been comfortably there, but then all of a sudden some things have changed. So when we have something like we've just experienced or we're experiencing now, like a pandemic, our baseline moves. And when our baseline moves, it cuts off a lot of our business. It cuts off a lot of our positioning. And if you were just a little bit to the right of center, all of a sudden with that baseline raised up, you're suddenly way to the right of center. So the bleeding edge of very rare vaporizes because there's really no room for them in the marketplace. And we can only be a little bit edgy. The lagging edge, you know, the companies that are not going to survive and the companies that are going to fail are the ones who have no innovation, that are so far behind the curve. They're into old technology, old business practices. All of a sudden, there's no room for those companies in our new baseline, because the people who are in the middle, who are more stable, who are taking less risk, are going to eat up all of the marketplace bandwidth. And that's what happens when this baseline raises up. So here you are, suddenly thrust to one side or the other. Maybe you're more of a laggard now than you used to be, or you're more bleeding edge than you used to be, and you're a little bit out of your comfort zone. My point is, if you ignore this change that we're going through, you might get left behind. It's as simple as that. Now, for those of you that think you're in the dead center, and you're in the middle, and you were doing okay before, so you should be doing okay now, and you're going to do okay again, I remind you that okay is a pretty low bar, because if you're average, that means half the world is better than you are. And that's a lot of businesses. And if your customers are choosing between somebody in the top half and the bottom half, the middle is not really attractive to them. So think about where you want to be in any bell curve for anything that we're measuring. But right now, your position, if it hasn't changed, is suddenly a little bit more extreme than it was before. So our business models have failed us, right? And more importantly, we failed ourselves. Yeah, these circumstances suck. I get it. There's no way we could have predicted this. There's no way we could have controlled this or stopped this from happening or even prepared for it, except that we could have been better prepared, right? And hindsight is 20/20, except this is going to happen again. So it is no longer hindsight. So in your do-over, some things I want you to keep in mind, because when this happens again, the question is, can you be prepared? Not will you be prepared, can you be? Do you have the aptitude? Do you have the strength and the fortitude? Are you willing to commit the resources and take the risks to be better prepared? And you'll understand as I walk through some of the things that you'll need to do that I'm advising you not to do, and therefore the things that you need to do, you'll see that some of these are very difficult choices you're going to have to make. So overall, as an industry, we probably need to take some smaller risks. And I'm talking about this live event industry in a highly seasonal business. It's an extremely risky business, but we need to take smaller risks in order to survive in it. You're going to have to be organizationally more nimble. Over the years, the weight of your organization keeps you from doing things. Individuals in your organization become roadblocks or obstacle lists to the progress and the quick decisions that you need to make in order to survive in our rather dynamic world. You need to focus on making more money from less business. We're making up for the fact that we don't make a lot of money by doing more business so that we can accumulate more gross profit. You need to figure out how to make more money doing less business, and then you've also got to save money. You need reserved funds for your business that are reserved. So the goal is to make more money with less revenue. Never measure your success by top line numbers. Top line numbers are meaningless as a very valueless scorecard. It's great when you're bragging at the bar about how much revenue you do, how many employees you do have, but that is not the same as winning. Okay, anybody can move the top line. I'll give you a good example. In the go-go 90s, when the stock market was crazy, companies were going public. You know, you only needed about $20 million of revenue, and you could take a company public. And if the stock market grabbed hold of you, you could triple, quadruple, get 100-fold return on your money. So companies were scrambling to get to a size where they were really attractive to the IPO market. One of those companies, well, we had two major companies in our industry that were doing that. One was Carabiner, who the remnants of that disaster became what we know now as PSAV, and then AVHQ, which got folded up into that. But before AVHQ became part of that CWC empire, they were making a run at going public, and they were trying to make their revenue as big as possible. And here's one way that they did that. And if you're part of that old regime and you want to argue with me about what your intentions were, come at me. I'd love to talk to you and catch up. Old times. Their strategy was to commission salespeople 5% of top line revenue. And it didn't matter what the revenue was. If they sold tents, tables, and chairs, they got 5% off of that. If what they sold wasn't profitable, they got 5% off of that. The point is that they had revenue coming in hand over fist, and they got a lot of attention. They made a lot of progress. But that's just a crazy way. It worked. Their growth was off the rails, and the revenue was easy, right? Revenue is really, really easy if that's all you want to do is get revenue. If you want to focus on profit, then you have the potential of being recession-proof or crisis-proof, or at least in a much better position than your competitors. You'll have a lot better sleep at night the next time this comes around. So here's my list of don'ts, right? Don't overvalue short-term returns. When the economy is good, we start making decisions based on one metric, one outcome, one benefit. These are short-term returns. Hey, I can rent this gear for one show. We can get 50% of the price back on that gear for this one event. That's a short-term return, okay? You make some very dangerous decisions when you do that. In your new model and your reboot and your do-over, save your CapEx for sure things, okay? Sure things have a great return. Okay, you may save some sub rental by going out and buying $500,000 worth of LED wall, LED product, because you have one job where you're going to get $100,000 of revenue on it. But if you don't have 5 jobs like that from 5 different customers in a 9-month period, that is not a sure thing. And having it so that we can sell more is not a sure thing. But if you're consistently doing something, if you have 10 clients that are each doing, $50,000 LED jobs with you, and they're 10 different clients, that is a sure thing, right? because you're diversified and you're not at risk of any one client signing off. So steady business deserves small bets with a clear return. And things like buildings and other debt are timed bets. Um, you know, one of those stories, I don't want to name names here, but there's a company that made a nice run in the late 80s and 90s and overplayed their hand in 2007. And here's what happened. They finally were going to get to the next level. And so they made huge capital investments in new equipment. They moved from their industrial building to a nice commercial office warehouse area, 4 times as much space, nice finish out, got new office furniture, and then the bottom fell out of the economy. And they were overextended on debt. Their revenue stream disappeared for most of us after 9/11. I mean, after the crash, you know, for a year and a half, and they eventually failed. They were eventually absorbed through an asset buy by another company, and no remnants of this organization exist anymore. And it's simply because their timing was bad on their bets, and they were betting that their success was going to continue. Okay? It was short-term returns. It took them down. I hate seeing that. It breaks my heart because there's really nothing you can do about it except pull the costs down and ride it out as long as you can. But their commitments were so large, and the banks weren't willing to give them any more extensions. So, windfalls. A windfall is a big chunk of business that just kind of comes out of nowhere. It's on top of everything else, and it looks like growth, but windfalls by definition are not growth. They're just the right place at the right time, and windfalls are extremely dangerous for us. Very often it causes us to invest heavily in one customer for one project and at the expense of the other top projects and customers that would be going on at that same time. So I'm going to say the more you are invested in one customer, the less you should put at risk. A windfall job is okay, but I don't go buy new equipment. I don't hire new people. Okay. I outsource as much as I can. Okay. If you bet on big customers, you will lose by big customers. Okay. And if somebody says, well, I've got a 3-year agreement for you if this is successful, does anybody now understand that that is almost meaningless in our industry? I mean, unless you're a big organization like a Freeman or a PSAV, you don't have the power to hold anybody to a 3-year contract. Even a $5 million trade association, you're not going to hold them to that contract. If it makes sense for them to pull out and dump you, they're going to do it. We've all seen that. Now, that's not saying that you can't have relationships and you can't have agreements about how to work going forward, but I'm not going to bet my business on a multi-year guarantee of business. Okay, so don't buy gear, don't add staff, expand offices without looking at least 1 year ahead without the windfall. If you can go a year ahead and not spend the money on that equipment or people because you took the windfall out of it, then you don't need it. Windfalls just allow us to do things that we should be doing anyway a little bit sooner. There's nothing really new on the face of the earth. We can have great ideas. Somebody else has had them somewhere else. You know, there's what's the saying? If you an infinite number of monkeys sitting at an infinite number of typewriters will write a Shakespeare sonnet. I mean, other people are going to do these things too. I'm a huge advocate of copying, right? Copy freely. You can copy what I do. I'll tell you how I do things. Copy freely, but market very selectively. So this is kind of an addendum to last week's. The best people, the best gear, and the highest quality, the best service. This is a very crowded marketplace if that is your value proposition. So anybody who's saying that that's how they're going to market and we can do anything that anybody needs because we've got all of this, that's probably the most undifferentiated position that you could have. So rethink that. If you're not trying to be the biggest or the cheapest, okay, which are other two strategic positions, then you can work on having a differentiated advantage, a differentiated strategy. So here's a very simple matrix of options. And you can pick one from each one of these columns and have a very nicely differentiated strategy. And because of the number of permutations in a 3x3 matrix, the odds of you being exactly like your direct competitor are really pretty slim. We don't have to have any more permutations than this to be statistically different. So we can focus on niche. Niche is, who you target the customer to, what geography you're in, or what specialty that you have. Pick one. You can have some uniqueness in all three, and you could target left-handed customers who wear glasses in, Central Ohio, who only want video projectors. Knock yourself out. If you can make a living doing that, that's great. Pick one of these things, focus on that niche, be extra valuable to someone. So it's better to be extremely valuable to a few people than be unvaluable to a lot of people. So figure out what your niche is. Is it geography? Is it a type of buyer? Is it a need or a service that you provide or fulfill? Figure out what that is. So that's your niche. Then you can have a philosophy, okay? Your philosophy of doing business, that why you are better thing. Pick one. It can be based on process. You can copyright a process. Did you know that? There's a lot of value in process if you can describe it and present it and show its advantages. How you package things, and packaging things can be standardizing to make it easier for the customer, or making it extremely custom. Okay, so how you package something, how you price things, how you convey value to the customer, that's a philosophy. Pick one and stick with it. All right. Price, you can choose where to be priced. You can choose to be the most expensive company in your segment. Why not? I mean, it actually works for some people. If you're really great at what you do, and you're extremely attractive, and your brand has a lot of value, there's almost nothing wrong with saying, hey, look, we are absolutely the most expensive company in the segment. And yet people still hire us. So would you like to understand why? Then let's have a conversation. So you can pick the high price, you can pick the low price, you can be the best value. My point is, whatever your philosophy is, dedicate yourself to it. Okay? Give it the energy that it needs to be out in front of you so that your customers can see it for themselves, and choose for themselves, because it's not going to appeal to everyone. And then there's brand. There's a lot of ways to express brand. You can do it through the customer experience. You can do it through the aesthetic of your business, the look and feel of your website and your offices, how you do business, your vibe. Okay? It can be on your reputation. How you leverage these things will affect the type of people that you attract. All right. My point is, make a choice here, okay, and then put some energy into it. There's so much more power that we can have in our marketplace, and there's so much more profit we could be made if we are who we are trying to be, instead of trying to be all things and chasing all business, or even somewhere in between. A little focus will go a long way for you. This one should come as no surprise. I'm going to tell you, I'm going to be really reluctant to commit to full-time workers and adding workers to businesses for the long term. We are a seasonal industry. We need to embrace the seasonal. I have said this for a long time. I've said outsourcing is important for a long time. I've been cutting a lot of slack. I've been mitigating my message because there's so much gravity and heritage in the employees that we have. People are very resistant to that. Right now, you shouldn't have very many employees. You're not obligated to bring everybody back. This is a great time to readjust your philosophy on full-time workers and how are you going to do business. So embrace the fact that your business is seasonal, okay? Use full-time equivalents and full-timers as metrics in your business to check to make sure that you're doing the right thing. The number of full-time equivalents to revenue versus the number of full-time people to full-time equivalents. You know, what portion of your business, what portion of your FTEs are actually FTs? Okay, how many people, if your full-time equivalents, if you use, you know, a lot of freelancers and contract staff, those can count as your full-time equivalents and understanding how your business is working, right? But not all of them need to be full-time employees of your business who work with you year-round. So you're really going to have to learn to embrace your contract and freelance team. You're going to have to plan much farther ahead. You're going to have to make some very small bets on these people. You're going to have to reserve people in advance and be prepared to pay out. You're going to be competing with everybody else for the same talent pool. They're going to work for your competitor. You know, it's a new world out there, but this is where we need to be in order to run a successful seasonal business, as most of you are. So I had an example here. I've got a lot of clients in play right now, thankfully, with the coaching groups and everything. I'm in contact with a lot of people. I've actually had updates from almost 30 people in just the past week, 30 businesses in the past week. So I'm getting a lot of market intelligence about what people are facing and what's going on. But one thing that struck me the other day is that I have two clients who their businesses look extremely similar on paper. They both do about $8 million worth of business. They both do, you know, events and shows and have full service audio, video, lighting, a little LED, do some outdoor, do some indoor, do some streaming. One has 4 full-time equivalents or full-time employees, and the other one has 60, pre-pandemic, mind you. Wow, how can they both be in the same industry doing the same thing, running highly seasonal businesses, and have that much disparity in how many people they're paying full-time annually? All right, well, that's the question you need to be asking, because which one are you? And how are you going to continue to be successful? Because right now, while neither of those companies is thrilled with their current market position, the company that's only had 4 or 5 employees in the past, who still only has 4 or 5 employees, is in a much more comfortable waiting position than the organization that's trying to figure out how to become scalable very, very quickly over a 3-month period. So yeah, be reluctant to commit to full-time workers. Figure out how your business works. Human beings, you don't need everybody in your business to be proprietary. You don't need everybody in your business to be custom. There are things that you need to figure out how to do that allow you to use trusted outside workers. And then the last big thing I want to talk about in this is a do. It's build a reserve fund. In other words, don't take your money and invest it back into the business immediately, right? You need to build a reserve fund. Now, would a reserve fund have taken away all the pain of the past, couple of months? No, it wouldn't. It would have given you an awful lot of breathing room in March and April when all those jobs were canceling and you're trying to figure out what to do and where support was going to come from and how long this was going to last, et cetera, et cetera. Build a reserve fund, and here's what you have to do. You need higher margins, you need lower overhead. Lowering overhead, lowering overhead, lowering overhead is a nonstop process. Had a conversation with an owner the other day. His overhead was running $500,000 a month. He's got it down to 200, and he's very proud of that. And I'm proud of him for doing that. But my question to it is, why isn't it 150? And he didn't have an answer. And now he's going to go back and figure out why it's not 150. Right? And basically, based on the math of his business, he should probably be at 100. So he's got to figure out what it is about his business philosophy that causes him to staff and add so much infrastructure for the business. What is he afraid of? Now, he doesn't want to go out in the warehouse and scan shows, and I don't either, but you don't need that many layers of people to do the kind of work that he's doing. So higher margins, lower overhead, that means you're going to have excess cash. You save that cash, okay? You don't take it out. You don't buy a new boat. You don't hire new employees. You don't buy new equipment. All of that stuff can be budgeted, okay? Excess cash is stuff that you have to save, and your goal is to have 1 year's worth of overhead and liquid assets. So if you have $100,000 a month in overhead, you need $1.2 million of overhead available sitting in the bank, you know, doing nothing, kind of collecting a little bit of interest. And you don't borrow from this money, you borrow against it, right? If you want to have a great banking relationship, put some money in the bank, and all of a sudden you're really important. So having money in the bank and some mutual funds or some other kind of liquid assets that you can say, now I want a line of credit for $600,000, you're not going to have any trouble at all getting it. You have to learn how to save some money. This is a very hard lesson I learned as a freelancer. And it wasn't, you know, it took probably, gosh, it took me 7 or 8 years of freelancing and being a successful freelancer before I figured out that I shouldn't spend all the checks when they come in, that I needed to pay taxes and I needed to save money. And one day I might need a retirement. And if I want to take a month off, I typically took July off and maybe took a little vacation. I needed some money to do that. And I needed to have money left over so I could still buy groceries in August. Our businesses are really no different. You need to be able to survive the slow periods, and knowing that if there's a crisis or an opportunity, you've got funds to back you up so that you can go to the bank and say, look, hey, I can do this if you just give me some money. All right. So, and if you're the business owner, pay yourself a salary and pay yourself a bonus. Don't take draws in the traditional sense of, hey, we got excess money, or I've got extra bills to pay, or my salary doesn't keep up with my personal expenses, and I'm going to take a draw to play catch up. Pay yourself a bonus like you would pay an employee or a manager. Put yourself on a program and develop that discipline. That's what you're going to need in order to build a reserve fund and, you know, basically not rob the piggy bank. So now what? Why is all this important right now? This is important right now because you can make money at any size. Most of us have not made the adjustments to our business to make money with the little tiny bit of revenue that's available right now. And the fact of the matter is we probably won't have the revenue we need to at least pay our overhead, our reduced overhead, until the fall. Okay? But once you've made the adjustments, you can make money at any size. You should be able to run a profitable business 12 months out of the year, even in the months where you have very, very little revenue. So think about how much overhead you have to shed in order to be able to do that. Now, the next 24 months are going to go by very, very quickly. And it's about how long it's going to take before we start to see some normalcy and we start to, probably think our old habits are going to work again. And that's going to happen really fast. Between now and then, scalable businesses are going to get much more consistent returns for the owner. Okay? You do not need to wait 24 months to be profitable again or get your salary back up where it should be. Okay? All that work starts right now, but you have to stop doing some things that you've done without question for years. Okay? Now the hard part's already done. You know, the Band-Aid's been ripped off. You know, it was just a tsunami of crisis for our industry. But now we can use the mistakes of our past, the vulnerability and the exposure that we created for ourselves that has wreaked havoc on all of our businesses, and do something better. We can learn from the mistakes of our past, and now's the time to start doing it. So I'm very excited about the opportunity for all of us to have this do-over. And I hope you understand that there's a lot of waiting involved in doing that. We've got to take small steps, and we have to wait to see those returns. We're not going to fix this overnight. We're not going to magically turn on revenue. You're in this for the long haul, or you're not in it at all. So now's the time to start thinking about how to do things differently and start working on not doing some of the things that we've taken for granted for years and years and years. So ready for Q&A, start putting some questions up there. I'm happy to answer any questions about anything. And I know this is another one of those weeks where I may have gone off the wall and gotten way past where your head was at, but that's okay. It's my job, right? I got to pull you along a little bit farther, and you need to see what's coming for you. And that's what today was about. Again, we've only got one more week of this. I want to get as much in your hands as possible. I'm finding another one of my favorite quotes. I'm enjoying reviewing the quotes I've collected over the years. You know, John Ruskin was he was an English art critic, but more importantly, he was a very prominent social thinker and a philanthropist. So you will find that the mere resolve not to be useless and the honest desire to help other people will, in the quickest and delicatest ways, improve yourself. So what are you doing to give back? Okay, please volunteer, donate, give free services to nonprofits, share resources, buy somebody groceries. You have a lot of resources at your hands, things that would just blow away people in need, knowing that you could do that for them. You know, now is not the time. If you want to promote your ability to do streaming, give your streaming away. If you want to promote the fact that you've got LED trailers or trucks, and that these would be great ways of communicating right now, give them away to people who deserve it, to organizations that deserve it. Use that opportunity to get yourself some promotion and some coverage. You know, make the phone ring again, right? Make the emails flare up again, right? Make yourself feel better, make your employees feel better, do something. So, all right, I see questions coming up here. Next week, I'm not going to tell you what the topic is going to be or how it's going to go. Just show up, be surprised. I guarantee it'll be worth your time. So we'll take a few questions here. So yes, I'm going to peek at the chat here real quick because it looked like a lot of you were offering some. Yeah, I'm seeing a lot of text here. So good for you. Thank you guys for sharing with each other, giving each other a little bit of hope about what they're seeing out there. Here's a great question. So what are the roles or job descriptions of the 4 individuals in an $8 million company? Well, here's the situation. In an organization like that, the owner works in the organization. This is an owner-operator. They have to be extraordinary at something. This guy happens to be a good technologist and a great salesperson. So that's his role. He's the client interface, as many companies like this are, where that lead person is the client-facing person. Now, he's got a top technology person that he keeps on year-round, because that person can do production management, they can solve technical problems, they can do pre-pro, they increase the credibility of the organization and make it easy to engage a client with a complex problem. So it's the genius, right? I've written about this several times about every event staging company needs to have a genius. And there's not a person that we dedicate to shows as a person we use their genius wherever we can apply it at any given time. And then the third person is probably some sort of an admin, and the fourth person is some sort of a warehouse person, because there is a substantial amount of inventory. And if you're going to bring in freelancers to help work in the warehouse, you need a consistent person to do that year-round. So you don't need a ton of people to do that. The office manager also does the bookkeeping, takes care of the healthcare and payroll and all that kind of stuff. Our businesses really aren't that complicated until we make them complicated by hiring people who can't do multiple things. So good question. Will that work for everybody? No, because not everybody is the owner that this guy is, but there are other owners like that. And if your gift to your business as the owner is that you're really good at finance, run finance, okay? Don't hire somebody else to do finance so that you can focus on sales. You're a finance guy. So do where you can make the most good and keep your overhead costs down. So we're seeing a lot of reopenings here. I'm seeing comments on reopenings here. I'm gonna just advise you to be cautious. I'm not trying to be Debbie Downer. And yes, some theme parks are opening. Some of the big resorts are opening. Some convention centers are opening. These are good indicators, but this is not the same as all of a sudden there's going to be business. They're just an indicator. So take it with a grain of salt. Say, hey, that's good news. Let's watch and see what happens in all of this. It's information that we can share with the client, but I wouldn't give it so much weight because it's not enough to influence really anybody's decision at this point. So I'm excited. I'm excited that you're excited, but we're not out of this by any stretch of the imagination. So we need to hang on as long as we possibly can. Let me check for some more questions here. All right, so trying to figure out the best way to answer this question about bell curves. So if I do a statistical analysis to say, okay, if I pull 100 people and say, do you like SpaghettiOs or do you not like SpaghettiOs? There's going to be some people who absolutely have never tried it. There are going to be people who never would try it, and then there's going to be people who have varying degrees of opinions somewhere in the middle. So we're going to get a distribution of answers that's going to be reflective, statistically reflective of a larger populace. It doesn't tell us whether SpaghettiOs are good or bad. It tells us that for the 100 people that we interviewed, 67 people have an opinion that falls somewhere in the middle of that, whatever that middle happens to be. If we add meatballs to those SpaghettiOs, I'm going to get emails from international folks asking me what SpaghettiOs aren't I? Okay, sorry about that. Bad canned food that even children sometimes won't eat. So if I put meatballs in those SpaghettiOs, then that median of people's opinions might change a little bit. Maybe more people would try it, maybe less people would try it, but there's still going to be a median group in there. So we need to understand a little bit about distribution and statistics. I'm not saying run out and do a statistics course, but you go online. There's some great statistics websites that help you understand how to take data. You can do a little self-learning there. Certainly with all the COVID-19 data that's out there and people doing amateur analysis and professional analysis of data, there's been a lot more discussion about statistics and distribution curves. It might help you to learn a little bit about that and consider something for your business. All right. Hey, we're a little thin on questions today, which means I was really uninteresting or I was too interesting. But again, questions about anything else that you want to ask about, you are welcome to do. I talked a little bit about the gambling side of this and why is CapEx gambling. Let's think about this. I'm not a gambler. I'm really not much of a Vegas person at all, but I used to go sit at the blackjack tables because blackjack is the only game of chance in the casinos where a little bit of skill is an advantage, can give you advantage. You can at least, because of the rules that the casinos make, come pretty close to winning on a consistent basis if you know how to play hands. So statistics say that, you know, if the dealer is showing a 5 and you're showing a 10, you should double down, which means make an extra bet, take one more card, and the chances are you're going to get closer to 21 than they are because they're going to have to take 2 cards. They probably have a 10 underneath, which means they have a 5, which means they have to take another card, which would be a 10. You know, 25, they're going to bust. So there are certain things that you can memorize about how it will work, so that you know what the odds are. You don't always win, and sometimes they 15 and they throw a 6 and they beat you, or at least tie you. So statistically, you have a better chance of winning if you know how to place the bet. And if you know that your chances are really high that you're going to win, doubling down, okay, placing an extra bet to take one more card, and that's what CapEx is to me. CapEx is doubling down. I know that when I sell a job, I can make money if I subrent. I know how to price things. I look at the cost, I add some margin to it, I sell it to the customer. Okay? If I don't go buy the gear myself and I subrent it from somebody else, I'm still going to make money. If I own the gear, the job looks like it makes more money, except that I had to buy the gear. I now have a lease payment, or I've used up my reserve funds, okay, and now I have an asset that doesn't have an ROI except for this one job. Now, if I have future jobs, I can increase my odds of that. But remember what I said about having only one customer. If I only have one customer running this product, then I'm betting everything on one customer, which is not a wise bet. If I've got 10 customers who have reserved the same equipment and I can cover it with one purchase and serve all those jobs, then that's the same as doubling down. The odds are very much in my favor. I could lose a job or a client, and maybe another one will come in, or maybe it won't, but my ROI is still pretty good, right? So that's what I'm talking about. Don't bet everything on one customer, because yeah, if you're right, you win big. But if you aren't right, oh my goodness, look what you're stuck with. You're stuck with a lot of inventory you can't use, and frankly, in times like now, many of you, who received some very large capital purchases here at the beginning of the year, you have nowhere to go and no one to rent it from. And yeah, you got maybe some 3 months leeway on your lease payments. Now look at where you're at. So be a lot more cautious about when you choose to commit to a long-term investment like a capital purchase. Make sure you really do have the ROI for doing it. All right. Let's see. Can you make a statement about events over 200 people actually returning before a vaccine, that reality? I can make a statement about it. That doesn't mean anything. It's not the number of people at the event, it's the number of contact points in an event that are going to matter. So if we have some protocols, you could have events with 5,000 people if the protocols are there. But nobody's described the protocols yet for 5,000 people at an event. And how are we going to do that? Is that 5,000 people in rooms with less than 200 people each, and they're all tethered together? There's a lot of things that we don't know about that. We also don't know whether or not there's ever actually going to be a vaccine. Okay, there may be some things that help. There may be some treatments that help. But vaccines, while early trials may be promising in a vaccine, whether or not a vaccine is safe often takes years to make that determination. And even so, there's still, H1N1 and SARS and things that we don't have vaccines for. We've simply learned how to mitigate the opportunity to contract it by contact tracing and monitoring. So there's a lot of things that we need to do to live in a world where COVID-19 exists. And a lot of that has to happen even long before a vaccine will ever be viable for us. And we will be having meetings again. I really haven't changed from what I've said, even 4 or 6 weeks ago, that, we should see business fairly, I won't say normal, but we should be seeing hybrid shows in the fourth quarter, because that gives us 4 or 5 more months to come up with the protocols on how we're going to meet. And it may be a 1,000-person event that has 100 people at it, okay? But there's still a substantial amount of money it takes to pull that off, because we've got a great online show that we can do for those people. And all that money that they're going to save by not giving overpriced coffee and food and beverage to 900 people, they can now spend on making that virtual event much more compelling, much more dynamic, and better produced. So that's really where we need to focus. We can't bank everything on a vaccine. So yeah, I guess I can make a statement. Focus elsewhere. So client liability in this case, again, I don't know about this. You can't, and I'm not a legal professional, and I'm not giving you legal advice. My understanding of it is negligence is always actionable, right? If a venue or somebody in the supply chain is negligent and it leads to sickness or injury to an attendee, negligence is always a liability. If we take the reasonable precautions, if we knew what reasonable precautions were, then it's hard to prove negligence if we took those precautions. So we need the standards. This is a great time to do a pitch about programs like ETCP, Entertainment Technician Certification Program, certifying riggers, and master electricians, things like that. Certification is a hedge against liability. Certification says we took every reasonable precaution to make sure that the people who were doing the work were qualified to do the work. Okay. Therefore, if an accident happens, and it is truly an accident, we've mitigated a lot of our liability. And this is what we're going to have to do with the health of our attendees, is make sure that we take the right precautions, but there have to be standards about what that's going to be. So yeah, interesting thread of rant. But again, these are my opinions. They are merely opinions. Another question: with our industry potentially having the longest runway back to normal, that is us, what are the merger and acquisition and private equity companies' opportunities, or do they run away scared? That's an interesting question. Again, this is just theory, and I'm as qualified as anybody to give you a theoretical answer on that. I think there's a good opportunity for if somebody wanted to do a roll-up. Certainly, there are lots of owners who would be interested in not going through this again and being the person holding the bag, and merge their organization with another, be acquired by another. So I think there's an opportunity there to do some strategic acquisitions in this economy. I think the companies that would be most attractive in that are the folks who have done something to shorten their runway, who've made some strategic inroads and getting into a hybrid space and converting hybrid events, doing something exceptional in that space. So the innovators are going to be much more attractive. And a lot of innovation is marketing, because it's how do you present what you've done. So there's some people out there doing some fantastic stuff, but they're doing it behind the radar. The ones who are going to win are the folks who figure out how to get it out in front of the world and say, hey, here's how we're doing this. Here's how we've made the whole act of doing a hybrid event extremely simple. And here's our methodology. Here's our platform for do it. We're going to see some software platforms and some control platforms that are going to be viable. And some people are writing them like almost overnight. And if it solves a valuable problem, we know that private equity will pay money for it and market the heck out of it. So yeah, I think I think private equity might be a little bit shy about our business, our industry, unless there's people out there who are standout, or they're just looking for some real bargains. I don't know who that answer would make happy, but when it comes to private equity, there's always somebody who's happy and somebody who's not. All right. So if you don't have any more questions, I just want to encourage you to send me stuff offline, things that you want to talk about, maybe some things you'd like to hear next week. Get your questions ready for next week, because there'll be a lot of Q&A in our final session. I want to make sure that you have everything that you need to get started on your summer and have a productive summer for yourself. I haven't made final decisions about what my pivot after this series is going to be. If it's run its course or not, we'll be making that decision here in the next week. At the very least, I'll get back to my regular monthly webinars. But why would I go back to doing anything normal after we've done all of this? So we'll wait and see that. So I appreciate everybody's support and encouragement through all of this, and the kind words and notes that you send me. I cherish them. On bad days, I might go back and read them again. So your words probably have longer legs than that. So anyway, I hope this was interesting for you, and the recording will be up in the next hour or so, and I look forward to seeing you guys all next week. All right, be well, be safe, talk to you soon.